Hello, my name is Thomas Herner, and I'm with GQG's Institutional Business Development Team. Welcome to the next installment of our 7 Minute Alpha series. As a reminder, 7 Minute Alpha is a format that we developed to share timely topics affecting markets and how we at GQG are positioning our portfolios accordingly. I'm thrilled to be joined by my colleague and our global investment strategist, Josh Schneider, who will be providing insights on today's topic, politics as usual. Globally, politics will certainly be front and center in 2024. This year, more voters than ever will be heading to the polls, as at least 80 countries will be holding national elections. That represents roughly half the entire global population. But what may this actually mean to investors? What portfolio changes, if any, are we at GQG thinking about in anticipation of such a consequential election cycle? Well, to answer some of these questions and more, I'd like to turn over to Josh to discuss further. Josh?
Great. Thanks, Thomas. Thanks for that introduction. And then, of course, everybody, thanks for tuning in today, as always. And I find this topic to be quite fascinating. And I guess that should be obvious because if they're not interesting, if they're not fascinating topics, probably no reason to do a 7 minute alpha on them. But specifically because the sort of the intensity, the headlines, just the sheer volume of stuff that has been already pumped out so early in the year on this topic, I find to be, I do find to be quite interesting because a lot of these events are certainly still a ways out, right? And so as we sit here in early March, we're talking about, the U.S. election, right? That's in November, but already when the first, couple days of the year, there were a bunch of articles that were coming out, kind of wailing and gnashing of teeth of what the sort of overall implications could be for all these things that are happening, all the elections that are going on right across the globe. And so, of course, for here, for us, right, what we're trying to do and what we're trying to understand, and what are the potential investment implications, right, of a lot of these elections. And so, while we'll get to that in a moment, I do want to just sort of set the stage because I do think there's at least some reason why you're seeing and you're hearing so many headlines and there are so many pieces about this. And I think it's encapsulated quite well here on slide one, right? So if we look to the graphic on the left, we see, a lot of the countries that are shaded in that will actually be going to the polls or some form of, whatever it is and that they're doing from a voting perspective. And on the right, you can see a couple of key things, right, that go along with that. So number one, I mean, over 4 billion humans are going to go vote this year. That's a lot. That's a pretty big number. And then additionally with that, you can see some of the probably more generalized fears and things about what's happening globally. We know there's a lot of wars and a lot of conflicts that are still underway. Of course, elections could potentially have very large implications on some of those things that are unfolding as we're into 2024. There's been a decline in a variety of metrics along what here we call democracy itself, right? So depending on what country you're in or where you're at, or certainly where you fall on that political spectrum. And I think lastly, there's sort of the ties into globalization, economic nationalism, or even potentially elements of deglobalization, right? Which is something that we have not seen in a very long time. With this rise of more, say right-wing parties across the globe, or if you're talking about, let's say Germany specifically, Alternative for Germany is really rising a lot in the polls, right? And this is a party that not that long ago was actually quite fringe and didn't have a lot of support. But with a lot of the things that have developed over many years, there's a group of people that have find some of these other, again, traditionally more fringe parties that are giving them a voice for whatever the case that is. So that will be very interesting to sort of see how that ultimately unfolds. And then in here, just sort of quickly, we're just giving a snapshot and more of a timeline. And again, the volume of people that are going to vote. So, certainly more closer in proximity to here in early March is the election in India. You can see taking place in April and May. And that's nearly 1 billion people. That's a lot. Number two, the European Union, which we sort of just touched on. The parliamentary elections, June 6th through 9th. And that's 400 million people. And then lastly on here, just from, I'd say, the kind of the big three, so to speak, of course, the U.S. election, which is in November, and that's over 200 million. So even with just these three elections that we're highlighting here, that's over 1.5 billion people. And so this is a big deal from a sheer, again, volume of humans perspective. But from our perspective, what we really want to understand is, well, historically, has that mattered, right? Is it really, is it the political landscape that has mattered from overall equity market returns? And that's really what we're going to look at here in terms of slide 3. And actually, I think I don't want to bury the lead here, is that the punchline is in the title of the slide, right? Is that historically, economics has actually mattered far more than politics when it comes to equity market returns, right? And so this is what we're really trying to show. And let's just focus on the US, from this perspective is if you look at over 50 years of index returns, so we're just looking at MSCI USA and running that from basically 1970 to the end of February in 2024. And I also want to overlay that with what were the different presidential regimes within the US over that time period. So the red shading being the president was a Republican, the blue shading being the president was a Democrat. Now, also, this is 7-minute alpha. This isn't 72-minute alpha. So this isn't meant for us to get into every detail about policy lags and implementation and these types of things. But really, the point is that we're trying to show here is really it doesn't matter what the shading was in the background. The thing just kind of worked, right? With a couple of very important exceptions. And again, this is not political, it's much more economic based. So the two kind of primary times where equity market returns were quite poor, basically for a decade or more, was during the 70s. So kind of 72 to 82-ish, where the index was basically flat. And then again, from kind of late 99, early 2000 to about 2013, where it took you about 13 years to take out that peak from the dot-com bust. And I think there's good reason for that. And that's because there were basically two recessions that occurred during that time period. So if you go back to the 70s and 80s, basically we had three recessions. One was one was quicker than the other two, but that's fine. And then of course from 99 to 2013, a couple of events unfolded along the way, but ultimately you got to two recessions. And so in absence of really multiple recessions, it's not so much, it has historically, again, not been really about the political regime, and it's been much more about the economic regime, right? And so to the extent, again, broadly speaking, that the future maps anywhere to sort of the past, right? And again, this isn't a forecast, right? These are just historical facts. Is that if I'm getting good earnings growth, right? And we believe that earnings are like gravity, and that growth is dependable, and I have certainty around what those companies can ultimately earn, and as the economic backdrop impacts that again has been much more impactful than just any sort of presidential election. And it's also too because in our view, a lot of these things are fleeting factors, right? Because whatever occurs during the election, it drives headline vol, it does a variety of things, but you tend to have a period of time to digest, right, what's happening. And certainly in the three major elections that we highlighted, folks can't just roll out of bed and change everything. So these things always take time, and you get a chance to digest. And so for us, we don't make tactical changes based on politics. It really does come down to what's the operations of the business and what is the dependability of earnings growth that we can expect, and then how economic performance, may ultimately drive that. Because if you look at something like, say, within the United States, there's a lot of so certainly a lot of spending from both parties, right? And so historically too, that's a lot of spending has tended to be nominally good for stocks. It may or may not be good in real terms, but certainly has been good, in nominal terms. But part of the issue has been as well is that spending is, to use an economics phrase, it's not neutral. And what I mean by that is, not every industry benefits equally, from all that different type of, from that type of spend. So again, there's a lot more implications from an economic perspective that tend to matter. Again, not so much just based on the election. And I think just sort of, lastly, from perspective for us, as we move outside of the US, we've seen this in the past, and it actually wasn't that long ago. Right. So if we go back to think about Brazil, and we go back to the Brazilian election in late 2022, that was an interesting case where you had what was base case that Lula was going to win. I mean, he was expected to win. And then you had a lot of, hand wringing and consternation about the potential, the transition of power, and would Lula ultimately go, pretty hard left, when from our view, he's, broadly just kind of, center left. And Brazilian equities sold off pretty hard over the next couple of months. But from our perspective, that was really overblown, and the overall fears that folks were worried about, in our view, weren't going to materialize. And therefore, we used that volatility to our advantage, and actually, layered into some of our exposure, and that ultimately that helped out. So it doesn't always work that way, but just as an example of historically how have we thought about elections, it really ultimately depends. If you do get some volatility and an ability to add to companies that we meet our our forward-looking quality criteria, that's actually that's tended to be a good thing. So that's I think that's interesting. No doubt you'll continue to hear a lot about this as the year goes on. I'm sure we'll probably have more things at some point to say about it as the year goes on. But again, I think it's going to drive potentially a lot of headline risk. But again, historically, it's been much more about economics than it has been about politics. So as always, thanks folks for tuning in. And Thomas, back to you.
Great. Thanks, Josh. Appreciate the insights as always. And I appreciate you helping us understand what's actually politically impactful versus what may just be political noise. But nonetheless, plenty of political storylines to follow the rest of this year. And nonetheless, we'll be watching it very, very closely. Well, wanted to thank everybody for carving out the time today and joining us. If you have any additional questions or just want to continue the discussion, please reach out directly to your GQG point of contact. Thank you again, and I hope you guys all have a great rest of the week. Take care.